If you ask me to talk about fundraising for the China market, and I'd like just to think first of all about the foreign currency fundraising by private equity. 2014 was actually a record year for foreign currency capital raised by the private equity industry for investment into China, with nearly $30 billion of capital raised. And our survey spoke to LPs from around the world and asked them about their investment criteria. And one of the very interesting findings, I think, is that more than 70% of the LPs said that they would refuse funding on ESG grounds. People quite often say, well, this is not really a China issue. You know, we see this in the US, we see this in Europe, but it very much is a China issue, because if you think of what's happening here, the GPs, the private equities, are raising foreign currency fundraising for the China market. They're raising that on a global basis. They're speaking to LPs in Europe and in America, and this is the message that they're coming back. And so more and more our own clients are coming into us and asking us to help them with ESG related issues because they're getting these kind of requests from their LPs.
What our LP survey found was that 88% of LPs globally told us they believe ESG adds value. And this is equally true in China as it is in the rest of the world. We did also find there's a lower level of engagement by the LPs in China. But it's worth saying that the Chinese government has recently launched, through the People's Bank of China, the final report of their Green Finance Task Force. What this is likely to do is to drive regulation throughout the financial services industry, including private equity. We've called our report Bridging the Gap, and sure enough we did find there is something of a gap between the expectations of LPs and the response of GPs on ESG management. There seems to be little common understanding between LPs and GPs, and even between different LPs on how to approach it. So for example, I'm aware of certain private equity houses that might have different ESG reporting requirements from different LPs. And what we'd like to see is more consistency. The LPs we spoke to told us that fiduciary duty is by far and away the most important driver for them to consider ESG management. And I think this really emphasises the link between ESG and value. Now, 1 in 5 of the LPs we spoke to told us that they currently quantify this value, whereas 3/4 of them would like to quantify it. Whether you're looking to exit through a trade sale or an IPO, there's a clear link between ESG and exit valuation.